All right, folks, Scott Henderson, shooter. Hey, and we are going to go over some Elliott wave charts, other technicals, and just have some fun here today. Got a lot of things I want to go over. Of course, at the end of the presentation, please do review our disclosure. Let me jump right in. All right, let me start off. Okay. I'm happy to announce we just launched our beta version of the Lazy Traders EMA strategy. And really, it's designed to simplify your life so you can either do an intraday trade, a swing trade, or a position trade and set all of your alerts in one place. I'm going to say the learning curve is probably about 3 hours. And obviously, so let's start in baby steps. I'm going to suggest you come in and take everything off on this when you set it up, and just save as default, so it's blank. So when you load it on a chart, you have to actually go set it up. You'll still have the radar screen up here, which sort of gives you a neutral or biased opinion right off the chute. So now let's talk about what the EMA is or what the strategy is. So we're looking for us to reclaim a specific point for us to look at entry. Now, unfortunately, it's going to give us the noise all the way up. Anytime that 3 or 5 day EMA crosses, it's going to tell you, hey, yes, it's a point where you can add. The reason is because when people see a stock at a different time, they don't necessarily enter at the best point. They might not see it to this back test, and this gives you a method to scale in. Now, once that's triggered, I'm going to take off that alert, and I'm going to step up to the next alert, and until I get my 30% add trigger, which you'll fire up here, by the way, you'll get a label that it's in play, then obviously you can add. Then once the second entry is triggered, come in and fire the third and wait for the third. Now, I also like to look at not necessarily the 3 and 5 because it's tight, but I like to look at the 2189 and the 144 on every chart because it gives me a clear visual of where everything's crossing, just as far as that structure. But let me walk through with how you would set alerts, and I'm going to use Amazon for that, just because that question was raised about Amazon. It has a good look where it's at. Pull everything back off here and just walk through. So we have a new chart that we want to enter, right? So we've got the setup, meets the criteria, and I'm just assuming that Amazon, it's back test. Go to the weekly, just a better look here. So we've gotten this back test up on the higher flag that's there. It's held. We've gotten some clean stair stepping as far as price. Still a little bit on the high side. I'd rather have it back down here, but the fact is that maybe some of you want to enter on the 4 hour just because of this back test. We went back to the sell side imbalance, tagged it. Good spot, actually, to try and put a piece on. However, my risk would be a break below this high or low as far as look. But structuring this, so the first thing I want to do is, have I reclaimed? Yes, I've gotten my first trigger. Have I gotten my second trigger here if I'm going? No. So right now, I'm going to just set it up and wait for my trigger to fire. So now I'm looking for a clean push above the 21, above the 34, and above the 89, which is pretty much all right there. So once we get that second trigger, we should get our third entry. And then we go to a mode of managing that position. Now, just real quick, does anyone have any questions about setting that up? Specific questions? So let me go to my second phase of the strategy. I'm going to suggest that you do this. After you've created, start off just running the 21 day. Above the 21 day, you're long. Below the 21 day, you're short. Basically, it's a simple way to do it. You can also do that just with an 8 day, so you get used to setting the alert. Now, one thing you can do here is you right click on your line and you can set up your alert. First thing, now, when you come in here, the conditions. Now, you can attach any condition to it. So if you want to put another strategy attached to it, you can do that as well. It just makes it more complicated as far as I'm concerned. But when you set your alert, so I want to know when this crosses, right? I'm going to come in and click crosses. That crosses bearish or bullish. So above the 21 day, I'm long. Below the 21 day, technically, I'm short. Then you just click create your alert. And now you have your alert set and it will fire just like in my alert window that I have here. We can obviously see that list to go through it at a certain schedule, however you want to do it. Then add pieces to it because ultimately it's a scale-in strategy. So let me just shut it off for a second. I want to come back to the thesis of why we want a strategy here from point of entry. Amazon is a great point here. So we've tested, this is where the big blocks are coming in as far as the order. That's where the institutions are buying. This is where the institutions are selling. So clearly we can see how they broke down here. So once we back test this, what we really want to have is a full position size right here at 220. Once we break above that lower high, then we're bullish. Once we get the back test is ultimately the best way to enter. And this is a good example. So we got a low, tested the band, really meets all the criteria for a center entry. So it is chaseable. We've gotten to push back up into the gap. Now we've back tested it. So this is like our retrace. So that is an optimal entry by, just basic math. So when we bring in the strategy, we want to just make sure that we emulate that as best we can. And in this scenario, let me just bring the additional levels in, the 144 EMA. So we ultimately have a trigger only for the first entry. We have no exit except for right here because it's choppy. I will say this. There's a good chance you get up to this wick and it rejects and comes back down here and takes you out. So there's a chance that it'll do that. So with each tape, I want to get a visual of what I think or where I'm at, and then I will set my alert based on each individual tape. And there will be some circumstances where I still use confirming trend support because it gives me a better visual of the tape where we are. So like right here, you can always just set that as an alert as well. Breaks below there, I would be out. I wouldn't take the risk on Amazon. So, all right, let me go to the SPY. I don't see any questions in there. And what I ultimately see here, let me make sure I've got the right one. Didn't, I could tell because my stuff wasn't on the chart. Okay, so I've got this maybe if, whatnot kind of look here. I see this right here. I see this is our big outcome. It's not on the chart because my assumption this is 1 and this is 2. However, that's pretty shallow. When we come back and look at the tape here, how we progress through the impulse wave, we're basically here, even though we've got this elongated point right here. So, part of my conviction is that I think we get this euphoric push into January 3rd or 4th week, then we get a pullback. Now, that outcome, whether it becomes this head and shoulders, left shoulder, head, right shoulder, right, is going to be a big factor. Head and shoulders only manifest about 55% of the time. So it's not like this 70% plus conviction, which is where I like to be when I'm looking at patterns. The more indicators that align with the pattern and the outcome, my bias just increases. So when I first see a head and shoulders, visually, I sort of put it on the other side of the left fence. It's not a priority because until we get that head that's defined, and I'm going to be looking for 3 peaking drives. Question is that peaking drive 1? Or is this peaking drive 1? And then we're looking for a peaking drive 2, peaking drive 3, and that leg ends. So not only do we see a peaking drive at the base of an impulse wave and a peaking drive 2 and a third peaking drive, internally, if you look at each leg, that's peaking drive 1, this is peaking drive 2, this is peaking drive 3. Same case here, peaking drive 1, peaking drive 2, peaking drive 3. Sometimes they're high and tight, and sometimes they're equality, where they're evenly spaced. So you want to look at the MO of the stock or the tape that you're looking at, really to get a better visual on that. So right now, my camp is, I think we're going here next. That's what I think. That sort of maps with the macro that I see. So that's sort of my take. All right, let's jump over to the NASDAQ. Very similar look. I've got that same head and shoulder up there. I have this same impulse pattern. And I'm going back to where the institution, where the block and the split orders came in, as far as where those numbers are. So I think we get into this tight band as far as the NASDAQ's concerned. The question is, do we flag there for 6 months or 3 months? That's the real question. So now, I also want to point out, you'll see on some of the charts, I've got this last higher low confirmation of a trend change. So when I put that label, that is what has to break for our bullish trend to end. That far down, 399. We're at 623. It's a long way down there. So, all right, let me go and start off just with our charts, and I'm just going to run through them in order like I have them as far as where we are. Now, each chart has got specific settings that I've set for each chart as far as alerts or not, kind of thing. Right now, AST Space Mobile is a hold and let it run until it crosses the 21 EMA, or it takes out 20% of my gains. That's structurally how this is set up. So right now, I've got an alert set on the 21 EMA here. If it doesn't cross that, I'm not worried about it. And realize the consolidation on my position, I think it's down 57, 56 bucks. So I've got plenty of room in this, to the upside, and that's sort of my thought. I'm looking at this as sort of a disjointed impulse, where we have this little thing down here at the beginning, and then we got this. And now my only concern with this is that we get this instead of this. So once we get broken above here, based on the noise here on these candles, because realize it's a nice general candle coming in wave 5. That's a nice general candle. I mean, we had clean acceleration, got toppy right at the gap. Look at where the gaps. Look where we got toppy right here. We haven't quite taken out this gap. How cleanly we break through that gap is going to tell us how bullish this is. Now, the nice thing about this tape, and I think we have a lot of potential upside. And again, this is space as a service for me. So when I look at this, this is our corrective leg. This is peaking drive 1. This is peaking drive 2. So I'm looking for a peaking drive 3 up here around 138. That's sort of my thoughts. So, AST Space Mobile, I want to hold. Okay. Damn, I sold some WRBY today. Sold it too soon. I'm probably going to sell a couple more shares after this meeting. Boy, that thing just ran. That was a beautiful thing. Now, let me go to the trading plan. What I've learned is following a plan is the best way to invest in the stock. If you don't have a plan, you need to write one for every stock that you enter, and you follow the plan. So right now, I took 50% off on the wick that went right to that 26.25, right? And I was running a 21-day EMA trailing stop on the rest. So when I come here and I look at this number, I can push it to the 5 simply because we're so euphoric on this candle. I know it's going to come back and take 50% of that candle. Well, the question is, do I want to give up that $3 or I just want to take the profit? Considering we're at a resistance zone here, I'm going to push it to 5. So, as far as an alert is concerned, I'm just going to come in and find a spot where I can click on this. I'm going to add an alert on the 5, cross it, crossing, set. When it crosses, I'll get the alert up here. Then I'll take that last piece off. All right, let's look at AAOI. I'm sure there's no questions here. So I'm looking at AAOI as we're in wave 3. I would expect us to get a little rejection here, which we are, just because of the bands here, where the resistance is. Our solid sell side imbalance is from 36 to about 36.01, 30 or 36.50. So it's only about a 50-cent range. So when we get up to this 3, I would not be surprised if this 4 becomes deep. So we want to be conscious of that. We get any sign of like an inside candle up there, like right here in this point, and then we broke down. Notice how quick we get those high and tight candles, and it likes to give it up. Same here, get this like inside candle, it likes to give it back up. I would suspect that we could get that. This could become an ending diagonal where 4 is broader than 2. So at that level, so we get up here to the bottom of this band, 35.69, you might want to tighten up. However, RSI is telling us right now, full steam ahead. This thing is not slowing down. So based on the confirming RSI, we're looking for one more higher high in price. So this is peaking drive 1. Wherever this ends will be peaking drive 2. And then we will likely get a peaking drive 3 around 42.50. So in AAOI's case, I'm like, okay, it depends on what my book looks. I mean, am I really well into the money with my positions? This is the kind of position that you want to try and hold, because if it breaks above this 38.90, it's got a shot at 47, just up there where those lines are that I have there, because that's my fibs that are up there. So if we break above that, it'll probably take out the 78.6. Realize the 61.8 is right here at 36.73. All right, let's look at Cypher. Now, right now, we have a 34 and an 889 EMA flag. So right now I'm letting this run. This is a nice pole, beautiful flag. 3 measures up to $28 for me. I'm just trying to hold it. It's got, one of the, there were a number of names, right? And where I liked Cypher was it held this gap, basically. I mean, it wicked. The body didn't close below this gap over here on this breakdown. Had this nice flush, and then it just launched, right? And then it sort of did the same thing here. So, I think it could be a very euphoric run. We could get a duplication of this whole leg here, which, potentially puts us back at $35. So again, this is another name I'm trying to hold. All right, looking at AIP. Boy, that just blew up. Oh my God. I just love it when I see a tape like that. Look at how beautiful that confirming high is. And it's just, this trend is your friend until the end. That's it. That's all you need to know. Just hold it. When trend breaks, let me sort of draw where my trend would be here. I'm going to give it that because it's got a little bit of room, and I'm just going to set the alert based on that. You can use the EMAs on that, but there are certain look that I want to use confirming trend support, because historically it's allowed me to keep more price. So the strategy is my effort to give you the same tools that I have in my brain and make it more functional for you. Hopefully it does that. Keep it as simple as you need to make it so it works for you, because that's the name of the game. If it works for you, do it. If it's too complicated, I'm never going to hold that against you, because let me tell you, sometimes this is just mind-boggling with how much stuff you have to track to manage this stuff anymore, at least, and stay in the money. So I still like confirming trend supports in certain circuits. Bros, boy, this was, I think this is my third run with this thing. I think it takes us out. The only thing I don't like is how deep this retrace was. And, we could just be in a flat, and we could reject right here. I mean, because we got this huge gap. We need to get above this gap. We need to get above 64 bucks. But, I went out and got some coffee this morning, and, I went to Bros. It's right down the street, less than a mile away. I waited 25 minutes. So guess what? They're busy, which is why they took off in the first place. So I would think that we put in something around this upper resistance band here. So we're going to put in that 3. So we have peaking drive 1, peaking drive 2, maybe a peaking drive 3 around 69 bucks. I'm good with that if it gets up. Right now, I'm projecting it to be a little shallow. So once we run here, now my alerts are set. I have the exit 89 alert set, the exit 2 at 144. So it gets back, these are these bands here. So it gets back below those, and then I'm going to get out. But I think we get a huge push. See how these bars have pushed way up here on 40? I think this is what we're looking over here. So, structurally, here again, I'm setting it for each stock based on the analytical view of, hey, where is Elliott wave? Where is our wave count? Where is our support resistance? Where are our fibs? Now, and I know some of you are going to ask, why the 3, 5, 8, 34, 55, 89, 233, 377, going up to 6. Those are all Fibonacci extensions based on a mound theory and how they expand. So I've attached this EMA strategy to my mound theory and how that functionally works, where stocks expand and contract. So when it's expanding, we're trying to stay in it. And when it's contracting, we want to get out. And you'll notice how the exits start taking you out. However, I like the 21-day. I could run just with a 21-day EMA. However, I also recognize when I back test it, when I use the 3 and 5 entry, when we have a breakout like this, the 21 hasn't crossed until, roughly, that's only about $1.50 here on Bros. But, most of the time, if you bring in the 3 and the 5, bring those back up on the table so you see how shallow it is. So once we get this breakdown, 3 and 5, you're entering down here. The 21-day isn't until way up here. So once you get this breakdown, you got your floor, you got your divergence, you got your other factors in play for the setup. The 3 and 5 is a great place to start getting your feet wet with one thesis in mind. As it breaks below that prior low that you're at, you're wrong. Maybe you trim, or maybe you didn't put as much of a position size. You'll notice that with me, as I'll stick my foot in the water with 10 shares or 5 contracts or whatever, whether I'm doing common or contract. And then when it progresses and works in my favor, I add. And really, that's what this strategy is intended to do. All right, let's look at Oracle. Now, I just think we're beginning here. We've had this nice pull off of that ramp. Their next report, their next earning report is going to be huge, because if the numbers increase in multiples and they actually see real CapEx numbers coming in, we're back above all-time highs. I mean, really, it's just, the 61.8 is at 326 back up here. Now, let me come in here for a second. I want to come back to the strategy, because this is where you have your setting. Input. So here you can set your hours. Now, just so you understand, there's 3 blocks. So the 3 and 5 is set to the 4 hour. The 21.34 is set to the daily. The 89.144 is set to the week. So it's already banned as a progression from intraday to a swing to a position trade. Reason being is because every position trade starts with an intraday setup. Every swing trade starts with an intraday setup. So I basically collectively put it into one box, because when you have a bazillion different strategies for different positions, it just makes your life more complex. So the strategy itself can be adjusted. You can change those hours based on what best for you. I mean, if you want to trade intraday, go down and set it for the 30 minutes. It'll give you the triggers based on the 30 minutes. So you can structurally adjust that. For the moment, Oracle, we're looking for back to 254 right now. Unless it breaks breaks these bands, I'm not worried about it. Just let it run. All right, let's look at HCKT. And she's getting ready. It's getting ready. It's crossed. Beautiful look. Go on. Just love look. Especially when I'm right. So the key here, this lower high, right here, that is where the position really starts. That's where the setup is. It's confirming we are now entering an uptrend. The question is, how far do we go? So let's look at that first, because I like this stock just from a look. Come out to the weekly, we really see where we are. So let's just put a little band up here, get a visual on where we can go. So it's not too late here, by the way. It's just you have to be cautious on how you scale. But let's get my colors right, because that'll bother. All right, so 50% back is $21. 618 is 22. Now that's a dead cat back. So that's our only concern with this lookout. Any 50% back, by the way, can be a dead cat bounce, and it can reject. So clearly we want to watch for price rejection, like this. Cleanly, the simplest way to see that is 4 candles, 4 bars. You get high and tight 4 candles like this, 1, 2, 3, and then you get a red candle. It's almost always going to flag. When you start seeing that continuation, it's more flaggy than that. So when you have the 4 candles, like I'm saying here, usually when you see that, you see that 2 green candles, 2 red candles right beside you. That's when you want to start thinking about trimming, whether your alerts have gone off or not, because that usually is a pretty clear signal that we're going to roll back over. If you look at almost every point where we've rolled over on this chart, right, it's been on 4 candles. So the MO of this particular tape is 4 candles. So we get up here to this 618, we get 4 candles. What do? You trim. All right. So where do we think this actually can go if this is a true uptrend and not a dead cat bounce? So let's measure it historically. It likes pretty deep runs. That's, if you look at and actually let me do this. Let me be precise. So that's what I was visualizing this wave 1 and 2, wave 2 and 3, right? Problem is that sort of ended right there. It was an ABC. It was not an impulse. So I'm going to flip. Hold on a second. I'm going to bring in an ABC. So I'm accurate. So this was an ABC. So structurally, my assumption is we probably get another ABC here. So if we push to this band, it probably is going to have a deep retrace. So when we're thinking about our structure and how we're setting up this trade, hey, gets above the 61.8, confirmation closing above the 78.6 is confirmation in my golden box thesis. So anything above the 78.6, same thing when you get up to the 178.6, the second golden box, it closes above that, then that's confirmation we're probably going to continue to the next box. So that's structurally what I see with HCKT. I'd rather it be an impulse. No, it doesn't for me. So that automatically, when I think about a dead cat bounce, I'm thinking of this as an impulse wave because it doesn't follow the pattern of an equal ABC pattern. So I'm looking at this as it potentially could be an impulse. So I want to see rejection here. So a dead cat bounce is exactly that. We're getting that little pop. We thought it was an ABC corrective leg, right? It tricked us. We didn't understand the difference between how an ABC pattern looks and how an impulse wave looks and how they're different. Notice how broad 2 is if it is an impulse. So it's a leading diagonal, most likely. So we should see some rejection pretty soon. The deeper we go, the better it is, because the reality is, even if it is an impulse, we may get up to the 50% fib, and then we're more likely to put in something like this where we break down. But the dead cat bounce is when we've put in a low, it doesn't quite have the euphoria or oomph or enough buyers to get us back above these fib zones, this box right here, box 1. So what happens is you get this bounce, it dies, and then it ends up giving you a lower low in price. Hopefully that explains. All right, so if we are back to an impulse leg, if this is going to come out of this, my assumption is we get something like this, and I'm just looking at the resistance bands. It's got a lot of push right up to here. So if it's going to be an impulse and it's going to get out of it, it's going to get real euphoric right here if it's going to get out of it. I still like the look. I mean, it's acting perfectly according to Elliott. All right, let's look at EAT. Now, I sold some of this this morning, because we triggered right here. Took out our 89, is it? Yeah, 80. Where is it? 89? Yeah, where's my inputs? So we got our exit notice up here. So exit 1 and exit 2. I haven't taken the second piece off yet. Reason I'm going to hold it to our 34 right here, just simply because of the look. To me, it looks like this impulse. See, so you have to come in with your bias about, hey, is the wave broken? Is it acting? I mean, this is a nice trend impulse off. So if it breaks the impulse and gets a little bit deeper, right? Then I get a little concerned about the setup. Outside of that, it's doing what it's supposed to do right here. All right, let's look at ONBS. Done nothing wrong. Right now, I am running my second entry because we haven't gotten a second entry on this one. We've gotten our first, right, from this grouping down here. I mean, you could add another 20% there if you wanted to, but I wait for that second trigger. Just that's how I want to do it. That's how I want to scale in. So ultimately, I'm waiting for that cross for me to get the second entry figure to add to that. All right, let's look at Dash. I can't tell you why I don't have everything set up on this, but hey, 20, we're going to put the 21 and 34 probably because we're right at the 21. Third entry is not blown. Second just blew. So even though I don't like this candle, it's not taking me out yet. And because if I remember correctly, I didn't have it on this chart. I have every one of my charts in another workspace that I believe I have a confirming trend support line there as far as taking that out. So I'll add it to this chart. The structure is, I think it's an impulse. So when I look at the count, you want to take into account what the structure looks like and how it's likely to react. And I'm just going to put this up here before I put the fibs and then put the fibs up because fibs give you your alignment to the pattern because at certain levels, the fib either supports or invalidates what the setup might be. So if we take our entire mound, we're looking for a push on 3, probably to 618. And this is accelerated, by the way. We should have not passed the 382 on impulse 1. So it's very impulsive. So this could be a dead cat bounce too. It could be right here. I mean, we could get total rejection. We've got this gap that it wicked to it. Body didn't get back up to it. So we are seeing some decent rejection right here in that candle right behind that. However, Dash just went into profitability, which is one of the reasons I like the trade because I was looking at it. And the metrics are if they continue to grow at this point, it's going to be a cash cow by 2030. I mean, a cash cow. They've actually got their delivery costs down, and I don't know how they're getting drivers to drive for it, but in some areas they're delivering for $2.50. Having a pizza delivered to my house right now is $5. So they're more than half of that market. So as far as the build there was a couple things that I like, as far as the structure. And I just think this keeps as price, in other words, they're picking up multiple orders, multiple stops. I just like the thesis behind this. So, and we just got that 30% ads alert on there. So I think it's heading back to about 250. All right, looking at Planet Labs. Now I have all kinds of alerts here set because I want more. Actually, I can take off 1 now because 2 just blew. I noticed that. 3 is not blown yet for the third entry. So right now I'm just watching where my numbers are. And really until it crosses that exit 1, and I'll get it up here in this box. I like that little window. It's sometimes you have too much on a chart, and I like quick reads where I can see it. Where if I come up here and all I see is a green box, then I'm looking for a reason why I should spend more time looking at it. And I'm like, nope, it's done nothing wrong. We've had a nice, clean, symmetrical ABC correction, right? So we had like a perfect correct, right? I mean, look how symmetrical that. I mean, it's nearly perfect, right? We've already broken back above that band. We're heading back towards this general candle. Once it clears this, I mean, it could launch. I mean, this thing could actually just blow up from here. Let me throw my fibs up here. And just to be quick, I'm just going to measure this here. So I'm assuming this is our corrected. 618 puts us up back to about $18 from there. That's a nice move on $13 stocks. All right, let's look at BMY. I don't remember exactly how far back I'm looking at this, but I know we were looking at this over in fundamental trends at 45, right here in this range. Now we've gotten our second alert. So, second piece add at this point. Third entry hasn't, as far as position size. So, notice how it's going to give us this active. So if, you don't have a position on, you open up the window and it says active. That means, hey, it's time to add. It's giving you a quick view of how to do it. Okay, let's look at Coinbase. Crypto's in its own world now. And I don't know if it's the liquidity problem. There's a lot of things I don't like about it, which I really haven't chased too much. I got a few on in coin. I think I only have 50 shares. So I don't have any calls or cash secured puts on this. I just have common, and I'm just scaling until I decide that I want to do something more based on crypto. It's got a nice spacing. This again is a pretty clean ABC structure, for this corrective leg. I mean, it's pretty solid. If you look at it, the only thing is we went past the 50% on the way up, but it really looks symmetrical and even. So if we're going to get another impulse leg, my assumption is it would be very similar to what this mound was. So, it's going to be very impulsive on 1. It's going to be a little shallower on 3, and 5 will just follow through. So the likelihood is that this is another leading diagonal. Notice how that symmetrically aligns to where those resistance and supply zones are. Boom, just I mean, just a perfect look. So now, right now on our weekly, it's got a neutral look because of this chop right here. But I venture that it will switch, and I'm just making sure I have, so it's on my 4 hour. Let's see if it changes. This is where you can change your time frame. If you want to see it in this particular stock, in this situation, I wanted to see it. So I'm going to go to the weekly. Now, weekly says short. So the bias still based on the 4 hour, but I just wanted to visually see what the different view was. So it breaks below this shelf. You can come in here and just say, if you have a position on, ultimately this shelf should hold. Notice where that wick is in this candle. You come back over here, it aligns here. So boom. Notice where that line is at. You want to stay above that line. So I am going to set an alert there on coin because then I start to lose interest at break. So hopefully you guys are sort of understanding my complex life here with indicators. So UPS, I like this for a full-blown market recovery. I'm only down Deere. I'm taking some heat on Deere right now because I bought common shares in Deere. And it's one of the, I think I have got like 5 or 6 stocks that I'm down on. I'm still holding Deere because I don't have a big position. I think I only have 10 shares on it, but still. I stuck my foot in the water because my assumption was that we recover. So I'm just seeing so much stuff on the supply side that gives me this. I just like that look. I don't think the market's that bad. I mean, the consumer's slowing down, and but realize unless the market, I mean, heck, gas is $2.19 here for regular. That's pretty cheap. I know the jobs issue with AI, but I like this back to at least 124 bucks if it is a dead cat bounce. So, now our triggers are in, so we've gotten our first entry. If I remember right, we've got our first entry right down here from these lows. Our second trigger hasn't triggered yet once it breaks above there. So confirmation, last low or high, confirmation of the trend change. When you see that on a chart, I'm sort of telling you like, hey, this has a strong possibility of having a trend change. All right, BX, I took some off on this just because of FOMC. I have only a few names. I took pieces off. But the main reason is that I didn't want it below it when I was looking at this because we have this shelf here. And we just went below it just a little bit. So I'll close it out. We break below, what is my number that I have on this? So it breaks below the 21 day, right? I'll trim a little bit more. I'm probably not going to close it out to the 34. But I have those alerted on the chart. Right now, it's still long on the 4 hour. ACN, this is what I see here. So we've gotten our wave 4, I think, and I think we're heading towards 5, around 296. So as you were, until it breaks below there, the alerts are set at, what do I have, 21, which is way the heck down there. Might want to tighten that one up. 21, 34 is way down there. The 89. Actually, I'm going to load my first exit here, second exit there, just so it gives me an alert on it. But right now, I'm not interested in closing this one until it breaks below that 21 day, simply because of the larger view of this. I'm seeing this as a wave 5 minimum. Now realize that's wave 1 of a larger structure. So wave 1 of a larger structure. So as we step, that's 1. So we'll get a pullback here, and we'll get a 3, 4, and a 5. So, right now this structure holds, and it ends up not being, we're not seeing a lot of dead cat bounce. They start to build, and then you get more of them and more of them across the board on the tape. So the patterns tend to rhyme across different sectors as the institutions enter an extra trade. So you can have like 50 gazillion dead cat bounce all at the same time. Then that's a sign. And don't worry, when I see that, I'll make sure you guys know that as well. Okay, so that's my thought on ACN. God, we got a lot of stocks to go through. All right, Cisco. I'm running a confirming trend support because of the euphoria here. This has got some huge upside with AI infrastructure. I mean, we could literally see a 2x, maybe a 3x on this stock because they're going to have to route that data, and Cisco's a big part of it. So I'll just leave it there. As far as American Semiconductor. I like this because this gap. I don't remember why we got that gap, but I think it gets back into that gap. I like it with a $32. The math works good on positions. I could start off with $5,000 on it, add another $5,000, add another $5,000, and the math works out really well. And, I'm sitting at a nice risk reward back to 40 bucks on a $32 stock. Just structurally, it looks good to me. So right now, we have gotten, now I'm just watching this because of the tightness here. We're just testing this. We haven't broken above that lower high. So confirmation of the trend change doesn't occur really till about 33.49. So right now I'm watching everything and I have the alerts here. Now, the second alert is active. Notice how it's showing us there. So right now it's saying add. All right. All right. So where are we at? Let's go to Pepe. Just a slow grind. Done nothing wrong. Small change. I like to stay over 10 bucks a share because the institutions aren't buying it. That was a pretty solid candle. Very solid candle. We're flagging. I mean, it could be a dead cat bounce. Could be. Could be. It's the euphoric tape. Look at this. It followed through with generals, right? Same here. MO. It likes to run, between 7 and 14, so 100% runner from here. So, 100% runner. I mean, we're looking at least $8 here, I think, to the upside. You come in and throw some fibs on this. I just like the way it looks. And I think at this point, when I like the way it looks, it's usually right. I'm wrong sometimes, but hey, it's usually right. So 618, 735. So maybe a little rejection. The only thing I don't like about this look is sort of peak and drive 2. Maybe we get peak and drive 3, but that should take us up to about 825 as far as equality. Okay, LO. Nice look. I've got confirming trend support alerts set on there, probably because of these bands. I think we rolled over, if I remember right. Yeah, I'm watching everything on here except for the first entry because we got it. We haven't gotten our second entry. Trying to decide if I want to add. We got a neutral bias on the 4-hour. I'll look at that for a second. Switch it to the daily. Short. Sort of thought that. So no motivation to add here yet, but I still like the look. 50% back off of leg 1 is going to measure at least to what? 124, 25%. Take the whole leg. 50% back is 136. Nice move to the upside. Good structure. In this market, anything that is holding up on these lows, if you pull back, realize this is where the institutions, one reason I'm following the sell side and buy side imbalance so close. It's because of how much rotation we have in the market. So they're going to go after names like this and pump them, so why shouldn't I pump along with them? So, all right. So this is our lower high. We're above it, right? So it's sort of confirming a trend change. It hasn't broken back above the 89 yet. But, I see it completely crossing. Just look at the structure on this. When we've crossed up here, look at this structure where we crossed above the numbers here. Once it crossed above there, we started that continuation of an uptrend. I expect something similar to that on Morningstar. I think it's going to get back, at least test this 250 range first quarter. And I'm thinking that whether the market's weak or not. All right, let's look at MBLY. I've got a confirming trend support line anchored at 1118 and 1072. I like it. 50% back. Another one of these look. Just taking our first leg gets us back to about 1250 from here. Not a huge upside on that leg, but our bigger leg, 50% back, is about $13. 20% on a $11 stock still isn't a bad game. All right, ELF. Now, I believe Rondo asked me to let him know when we got that back test. We're sort of getting that back test here. I've got my alert set, even though it says short. If it breaks below this confirming trend support, so roughly that number is $72, then we're probably continuing lower. We did get a little price rejection here, but this consolidation, I think it's going to pull back out. I mean, just looking at this number, you have a confirmed low here, firming, divergent low. Nice, high and tight. Did it here, right? Notice it. They did it here at the end of it. Notice it did. How much broader this breakdown and how much tighter this break, right? So this was fleeting, okay? This is higher and tighter, which means more of a launching pad to me, which is why I love. So that's my 2 cents. We closed below that really, I mean, technically you can even hold it down to the 67, but I don't want to take that much heat in this market. All right, need to get my hide video pad there. There you go. So there I can. So IFF, this is something that Kirk alerted on in Fundamental Trends. I believe it's on a punch card stock. Right now we've crossed and I got an alert to trim because we broke this confirming trend support line I have here. However, this wick, and as a matter of fact, I'm just going to move it down because this wick is really where it breaks, 64.44. It's a mixed bag. I wouldn't add here. That's for sure. Hide floating meeting. All right. Looking at Royal Caribbean Cruise. I just like the, how symmetrical this shelf all the way over to this. That was a perfect. Tagged it, overshot it, tagged it again, rejected it, broke back up through it, back tested, held. That to me is really beautiful spot. And we're holding it here. So trend doesn't confirm until back above 272. But I like the look of it. And it's had nice equal ABC corrective leg. So the game is it going to work or is it not? And, ultimately I'm going to go back to know when you're right, know when you're wrong. So where are we wrong? breaks below this confirming trend support line, I'm wrong. It's not going to. That's a simple way to do it. Okay, DE. This is my only reservation with UPS because of this rejection. So right now, deer is a huge factor with autonomy in agriculture. So I don't think we've resolved this issue with China, and I think that's what we're seeing in this tape here. I haven't cut my shares though. I mean, I'm down to like 20% on them because I added here, right? But I'm not cutting it yet. Reason is because it was a small enough position, and my thought was if we got an ABC structure, I would add on the pullback and give it a second shot if we got down to about 450. That's my thought. That's how I'm playing it. I still like it for recovery. Copper at $11,000 a ton is not bearish. It's not. I don't think we've ever had a recession when copper's been that expensive. Ever. So, that's a hang up I can't get over. Okay, Grail. It's sort of dumped. I've not even trimmed it yet. Reason is because structurally I don't think it's done anything wrong. I think it's just it's still holding the shelf. I've got confirming trend support down here at about 88. Then I'll trim half, and then I'll plan on adding back. I'm not going to give up on Grail even if it breaks down. I want to add back to it because I think the structure has a lot more upside, and it's just euphoric. Now, obviously, we get a huge breakdown. My thought here, the trade really was peaking drive 1, peaking drive 2, and peaking drive 3 should come back around 130. I'm good with that. That's the trade. So that's my thought. All right, BBAI. I like it. I do. I like it. I don't even know what they do in AI. Hey, works for me. All right, so we get back above this 724. It's going to test these highs around $9. And then we're looking for some significant upside. Now, this infrastructure, and positioning, see, I think we're still early. And the reason is because the second delivery phase of NVIDIA chips is starting in second quarter 26. So all of the chips they've made, they're printing now, have been sold and will start being installed in existing facilities. The new server areas, the new super AI centers, don't really start till the end of 2026. So depending on what they've got, almost everybody and their mother bought into AI infrastructure. So I'm thinking second, third, fourth quarter 2026 is where we want to add, but realize the institutions will come in really hard on. So, you look at our prior highs up around $16. Just realize that structure implies that this is our breath back to the upside when we do get it. So this is like wave 1, and we're going to get like a wave 2. And I'm just going to draw this quick for a second so I can show you where my thinking. So I'm looking at this is structurally what we're looking at on the aggressive side. Back up to roughly where this is our 3 in this range, euphoria. Now let's come in and throw a fib up there to give us measurement on that. I'm just going to measure this first leg here, come in here, put it here. 1618 is totally viable at $17. So, also is in line with the thesis of stop runs. So they'll run it up to $17 and reject. Once it gets above here, it's running. It'll run for $7. So that's one reason I want a piece on BBAI. All right, let's look at SMRA. Still question whether or not it's this quarter, next quarter, or the end of 26 before nuclear really catches on and the secondary power sources because of the AI thesis with infrastructure. We have very few markets. Like, for example, you wouldn't think that Arizona would have a lot of excess power, but they do. The problem is it's so hot there, cooling the servers is very expensive because of that reason. But they have great access to power. They actually have more excess power than anywhere else in the United States. And, if you look up in the Northeast, around Michigan, really over to New York, there is no excess power. So anyone who builds these major data centers up in that neck of the woods are going to spend a fortune to run them. So we're going to start seeing that consolidation around power. But again, I think it's next year. So, structurally right now, I'm waiting for the third trigger on this or second trigger, to add a piece. We've just gotten the first triggers, right? And realize at any point, the reason these trigger up in scale. So let's say you didn't see SMR till here, right? Well, you wait for your trigger and you enter here. Or let's say you didn't see it till here. Well, you wait for your trigger and you enter here, right? You still can catch that last little piece of it. Of course, your risk management is going to be a factor in how you do that, but you still can add. All right, VM Wave, disappointing me. I got a decent. I think I have 1,500 shares in this one. Until it breaks that confirming trend support, it's the only red one on the tape that I'm holding. That I'm really sort of kind of red on. Red for me is I'm down a couple grand. So breaks that line, I'm going to trim. I think this still holds. I'll probably buy it right back, $2 lower. Still hasn't done anything wrong. It's just deciding what's it going to do, and it needs some institutional buyers. I was hoping it'd stay above $10 and institutions would pick it up, but we've drifted below there. So the blocks and the splits aren't going to hit this tape yet. It needs to get back above $10 before they get interested, because they just don't buy a stock below 10. All right. So let's look at Rocket Labs. Now, man, I just like perfectly sold cash secured puts. It was like perfect. I mean, just perfect. Right down here, is where I sold. Perfect. Thinking about trimming, but right now I am using this confirming trend support, which roughly is running to the wick of this candle. Once we get a body candle above there, I'll run it up to 50% of that. If you look at the EMA strategy on how to manage that, I've got everything lit because I'm following it, because it just crossed up. This looks to me like a launching. The only thing I don't like is that we gave it back here on this look, and then after this run, we gave it back here. So that's one reason confirming trend support is worth. All right, Imperial Petroleum. These are some names you guys wanted me to look at. Actually, it looks decent here as long as that wick holds. Higher low. Yeah, it's got a decent shot. Confirming, I don't have anything yet for 1, 2, 3. So now my alert. I just put a confirming trend. These wick gets below there. I'd wait and see what it gives you. That's all I would do. Because if you add above this 480, or when you get your triggers from the EMA strategy. Joe B, done nothing wrong. Nice, clean ABC corrective leg. I keep looking at this, I don't know, every 4 or 5 days. I think it ends up on my radar just because I like what it did on that first run. This was a huge run. I mean, huge run. Huge. I think I was about 240 with the calls that I had on there. All right, so this, to me, I see an impulse. So, 1, 2, 3, we're putting in 4. You still should get a 5. So at least back to $16 here, I would think. Irene, I don't know, not confirming. Got a nice divergent. Well, no, that's actually a confirming low here. I'd like it best if we got one more push lower, like to about right here. $35, and I'm just looking at this. Your sell side. We're right in the sell side imbalance. I'm trying to get the script so it gives me a better sell side imbalance line. So we're right here. Clears above that 46.77. We should hold. It's trying to. However, it's testing the lower side of this band. So you have it's right above the buy side imbalance, which was right here, just right there. So that's, like both zones are right there. So it's into it. 50% back is a good spot for a bounce. It actually, if we weren't so elevated in the industry, it would be a good place to start scaling into Irene, with the assumption you're going to add back at 35, and then you're still going to probably add back at this next shelf. If you structure the trade that way, yeah, it could work. But in my opinion, there's better setup. Set an alert on it. It breaks above that lower high, then definitely you can start a position. That's just how I would look at it, because now I have some more conviction that it's going to go back. All right, let's look at OPAD, OfferPad. I still think it gets back up there. I think those alt real estate companies do well when people can't sell their homes. And if it doesn't do well now, it'll do really well when the baby boomers start selling. But the reality is that's still about 5 years away. Clears the lower high, then our trend changes at 220. Unity, beautiful thing. I don't have my $30. Son of a gun. Something shook me out. I don't remember exactly. So let's see where this is going. All right. So I'm going to call this a consolidation. Look, 1, 2, 3 peaking drives. So we're going to call this a 1. Say 3, 4, 5. Now we're going to measure it. We're going to measure it. So 1, 6, 1, 8. Boy, how perfect was my line, huh? I guess I've seen enough. We get back above here. This is where our main conviction long is. Then the crazy part about this is it really does have some huge upside. I haven't heard what the contract numbers are with the U.S. government, but I'm starting to hear news that the government's heading towards their own AI infrastructure instead of third parties, and Unity is just going to absolutely blow up. That'll be like SpaceX when it goes public, kind of thing. I don't know where I would think we'd clear all-time highs. However, that's just a little hyper. All right, looking at Redwire, nice look. According to the EMA strategy, right? I believe we haven't got our second entry. We've gotten our first, clearly. We don't have a second entry on that one yet? Not yet. So when it back tests, so the assumption would be it would be an impulse here. Where's the fibs? Where's our shelf? Really here, probably where we get rejection. It probably looks pretty deep. Pretty symmetrical to the tape. MACD is crossing on the weekly. MACD is sort of wanning. Could still reject. I'm just looking for a reason for it to reject now. So it's a good reason for it to reject right there. Needs to clear that. That's a sell side imbalance that's there, sitting right overhead. If it doesn't reject there and we clear that, stay above on the daily. It's good. It's kind of waning here with RSI. Not a clear bullish change yet. Really doesn't happen until we get it back above 1189. But it's worth a shot. I mean, because it does have some decent upside, so your risk reward's good. It's in range anyway. All right, ENVX. It's got a decent shot. Looks like an impulse to me. So do we have the second alert? Yes, we do. We were waiting for the third entry. So according to this, we're waiting for that third entry at the 34 EMA to add the third position on. It looks to me like a clean impulse to the up. So we're just going to measure this first one. Obviously, this will be an internal wave. 3, 5 will come in right here. Then we get an ABC right below there. That's a better entry if you don't have a position on in ENVX, this ABC structure that we'll get probably something like this. Look very similar to that, I would think, but that would be, it's not much lower than where we are now. So, honestly, it's a good spot to scale. ON, nice. Buy side liquidity came in. I mean, institutions bought right here. So let's look at the weekly. I want to see what this is doing out here because it looks actually it's very interesting. Cross here, 50% on the RSI, full speed ahead on all the EMAs. I have it marked for an exit on the 89 when it crosses. So let me see what the 89 goes. Actually 144. Oh, what is this? The 21? No. 34? No. 5? No. What the heck is that dark green? I don't know what that gold one. I'm not seeing it there. Hold on. Okay, there's 21. I thought 21 was green. All right, so I'd set my alert on it. It crosses the 21. Take some partials. So let me find a spot. 21 crosses either way. Change the timeline to February 8. That's how I would manage that. It's honestly confirming trend support works too. Just go straight up here. Use your lower wick. Set your alert on that as well. Takes you out. That's a huge uptrend. Really, I mean, nice euphoric push. I would say that we get something like this. We put the fibs up there. I still only can measure 1. So 1618, around 57. Totally viable here, just for that look. All right, we got a couple more charts to go through. PDYN, it's trying, still confirming on the lows. It's really not broken it though. It just rejected. It really doesn't get bullish till it gets above this 24. Still needs some more time, but frankly, it's done nothing wrong here. It just hasn't broken out. All right, beautiful flag on clean spark. Yeah, obviously if you're in from here, it's telling you to trim take part, which you sort of have to take or consider that based on what pattern we're in. This is clearly an impulse without question, right? It's wave 1. That's wave 2. We're going to get a wave 3, wave 5, whatever it comes in. So if you're going to measure your fibs off of this, 1618, totally viable up there. Boom, 24 bucks. I couldn't have drawn the line better, just out of random, but that's my thought there. All right, NEE, it rejected the upper band, but now it's coming back pretty quick. Pretty clean ABC, actually. It's a little noisy, but that's probably because of its price point. Sort of more of a flat than a clean ABC, I guess. This needs to hold right here. That needs to hold. Breaks below there. I'd cut, run, wait to add it back down here because it'll blow through this shelf. That breaks, it's going here, 73, and it'll probably test this floor. Reason, we come in and just show you. That is an XABC pattern, right? One of two patterns that has the chance of reverting to the mean or taking back 100% of the move. So be mindful of those because they tend to be fast and hard when they reject. And this does look more like an impulse. So be cautious. EPM, confirming trend support. Run it right there. You're above all of your levels all the way up. Best way to manage it. Go right to your wick at 202. Set your alert. Breaks below there. Start trimming it. When it breaks below there, move it down again to your next level. Set your alert. Trim. And about by the time you move it down to the third level, your bands, your EMAs will work. Realize it's not a micromanagement strategy. It's not going to be as high and tight as confirming trend support. So you just need to recognize where you use one versus the other. And really it's preference. Right now, this thing's confirming. So, hey, it's full steam ahead until that trend breaks, period. All right. Well, with that, folks, I'm going to call it a day. Great trading, folks. Until next time.